Hello everyone. I hope you can hear me. This is Moran Harari. Thank you very much for joining our first FSI webinar. If there are any technical problems for any of you, please write in the chat, or there is an icon of hands which you can click it, and then I can see your hands and I can unmute you and ask whether I can help with the problem. I think there are several more people who are supposed to attend, but let me first introduce you to the agenda today. I hope the people that are a bit late in 1 or 2 minutes, then they will pick up. Okay. So this is the agenda for today's webinar. Following the FSI review process in 2016, we have made several changes in the methodology, and we would really like to update you about them. So today I will first tell you in short about the FSI review process and the results of it. Then I will explain in detail about the secrecy score, the changes we've made to the existing key indicators, the new key indicators we added, and the changes in the way the data is presented. Then I will refer to potential changes to the combination of the secrecy score and the global scale weight. And finally, I will update you about the expected date of launch. So I think the slides will take roughly about 30 minutes, and then I will open the floor for questions. If you have any questions, please click the hand icon, and then I can unmute you, and you can ask your question, and I'll do my best to answer. There are also 2 very short polls I would like to circulate to you at the end of the webinar, and it would be great if you can invest 2 minutes to answer them. I see here, okay, just to check that there are no hands in the air. All right, so let's start. In 2016, as most of you know, TGN has conducted an in-depth review process of the FSI methodology. The review process comprised 3 main elements. The first one is an independent statistical audit by the Joint Research Center of the European Commission at Ispra, Italy. The second is an electronic survey with various stakeholder groups, including academics, experts, users, and officials of ranked jurisdictions. And the third are proposals for reform, which were based on the survey results and internal consulting we've made. I should say, though, that some of them are still subject to the feasibility of data. So today, I'm going to focus mainly on the third element, the reform that we've made. The FSI survey was conducted from January to March 2016. You can view the results in the report we published in July 2016. Most of the suggested changes, which received significant support in the survey, were implemented in the new methodology. So, for example, out of 12 suggested changes in existing indicators, 8 were implemented, and out of 21 suggested new indicators, 13 were taken on board, partially as subcomponents to broader KFSIs. Unfortunately, the suggestion to include whistleblower protection as a key indicators, which I must say received overwhelming support throughout the survey, cannot be realized for FSI 2017. And this is because various checks we did on data availability have shown that with the time and the staff resources we cannot commit to produce sufficiently reliable data for 112 countries. We do, however, expect to be able to include this indicator for the next FSI in 2019. So first I will update you on the general changes of the index compared with the FSI 2015. In terms of geographical scope, we've added 10 countries, which leads the FSI to expand from 102 countries in 2015 to 112. The decision on the specific countries was based on several considerations. So first, we expand the coverage by adding the top 50 exporters of financial services as measured by the FSI 2015. And this adds 2 countries, Thailand and Ukraine, as you can see in the middle column. Second, we add countries for which there are indicators that they are attempting to create an offshore financial center, or that their laws and regulations are attracting international finance through tax or secrecy provisions. This adds another 4 countries, Trinidad and Tobago, Indonesia, Kenya, and Puerto Rico. Finally, we decided to include all EU member states, which adds another 4 countries, Bulgaria, Croatia, Lithuania, and Romania. And this is partially because, due to their advanced economies, the European Union members are expected to play a potential role as facilitators of illicit financial flows, and partially because the review of EU member states' financial secrecy formed part of the major research bid, which finally obtained funding by the European Commission. In addition to several changes we've implemented in existing key indicators, we merged some of the indicators and added 7 new key indicators. So as a result, the number of key indicators increased from 15 to 20, while maintaining the broad 4 groupings. So to remind you, this was the old table of the key indicators. As you can see, the secrecy score was based on 15 indicators related to 4 main themes. So the knowledge of beneficial ownership, the corporate transparency regulation, the efficiency of tax and financial regulation, and international standards and cooperation. Now, you see more or less the same division of the 4 groups, slightly changing the titles, but more or less the same. But we have 20 indicators instead of 15. So now I'm going to get into more details about the specific changes we've made. I will first take you through the main changes to existing indicators, and I think this will be fairly quickly. And then I will explain you in more details about the new indicators. KFSI 1 on bank secrecy. So here the question on whether bank secrecy have a statutory basis was removed. And actually we replaced it with a question on the existence of criminal sanctions of breaches of banking secrecy. Now I must say there are additional changes, but they are quite minor, so I will only focus on the main changes I'd like to update you with. About KFSI 3 on company recorded ownership, we now provide partial credit for updated legal ownership. This is compared with FSI, where we gave credit only for updated beneficial ownership. In KFSI 15 on harmful structures, it includes now also a question on the issue of large cash bills of value greater than $200 or equivalent, and on the risk of prison sentences for bankers who willingly knew the money they managed stemmed from tax evasion or embezzlement committed abroad. Now here there are two mergers we've made. KFSI, the previous KFSI 7, Fit for Information Exchange, and previous KFSI 8, Efficiency of Tax Administration, are now merged to KFSI 11 on Tax Administration Capacity. Several questions were added in lieu of previous ones. So, for example, the indicator refers now also to the existence of a central unit of high net wealth individuals, and to whether the jurisdiction requires mandatory reporting of tax avoidance schemes by taxpayers or by tax advisors. The second merge we did is of KFSI 14 on international transparency commitments, and the previous KFSI 15 on international judicial cooperation. It is now merged to KFSI 20 on international legal cooperation. This indicator measures the extent to which a jurisdiction had entered into international transparency commitments and the degree to which a jurisdiction engages in international judicial cooperation on money laundering and other criminal matters. On KFSI 18, Automatic Information Exchange, we've made some significant changes due to the recent developments. So now it comprises 4 elements. The first one is whether jurisdictions have signed the Multilateral Competent Authority Agreement, which we call MCAA, in order to engage in automatic exchange of information according to the Common Reporting Standard, which we call CRS, and whether the jurisdiction will start exchanging either in 2017 or in 2018. We don't take into account a later engagement at this stage. Second component is the number of jurisdiction that a specific jurisdiction has chosen under the MCAA Annex E to engage in automatic exchange, or the final number of activated automatic exchange relationship published by the OECD. However, and this is important, this indicator considers only the activated relationship under the multilateral CAA and not the bilateral CAA. We don't take them into account because we don't want to encourage them. The third one is to what extent the jurisdiction has placed hurdles in the way of effective information exchange under the MCAA. So we refer here, for example, to whether the jurisdiction postponed automatic exchange with specific co-signatory of MCAA to 219, or imposed conditions to engage in automatic exchange beyond those required by the MCAA. So for example, amnesty programs, and whether it chose to be listed under the MCAA Annex A to prevent receiving information. And finally, we take into account whether the jurisdiction engages in pilot projects to assist developing countries. And the same applies, of course, to developing countries that joined. So now we're going to get into details on the new indicators we've added. First one is KFSI number 4 on other wealth ownership. This indicator is comprised of 2 separate components. The first one is freeports and cash vaults. Here we measure whether freeports and cash vaults are available as places to store valuable assets, and whether identities of beneficial ownerships of those facilities are recorded and published, or at least automatically shared with the tax administration of the residence countries. Now, why this is important? Well, it is known that the value of assets stored in freeports and cash vaults around the world is rising. And it is believed to be in the hundreds of billions of dollars. So freeports and cash vaults are attractive for kleptocrats and tax dodgers, mainly because they provide confidentiality and little public scrutiny. In addition, freeports are known as a fiscal no man's land, and this is because They allow the suspension of custom duties, sales taxes, and other taxes until the final delivery of goods. And if there is no delivery of goods, then they will never be paid. Therefore, they are often misused for tax avoidance and tax evasion purposes. The second component is real estate ownership registry. Here we assess whether the beneficial owners and/or legal owners of real estates are disclosed in a public registry online, free of cost, or up to $10 or euro or pound. And this is with the exception of real estate where the beneficial owner has his tax residency. We decided to incorporate this component because the absence of ownership registration of real estate is mainly misused for money laundering purposes. So criminals may be drawn to real estate as a way of laundering or concealing illicit funds, among others due to the ability to use cash while avoiding the disclosure of the ultimate beneficial ownership of real estates. And compared with other methods, money laundering through real estate does not require a lot of planning or expertise and therefore is fairly uncomplicated. Second new indicator is KFSI number 5, Unlimited Partnership Transparency. And here we ask whether all available types of limited partnerships required to publish online and in open data format, updated, legal, and/or beneficial ownership information on all partners for free or for limited cost, and whether they are required to submit and publish their annual accounts for free or for limited cost. We do give partial credit if only updated legal ownership is published online here as well, or if accounts are only submitted to administration but not published. Now, the reason we incorporate this indicator is because in recent years we see more and more the misuse of limited partnership for tax evasion and avoidance and corruption purposes. In some jurisdictions, partners are not required even to register, although they do influence on important management decisions and leave the limited partnership vulnerable to misuse for illicit purposes. Where limited partnership is not required to register the ownership of its partners, it's more difficult to authorities to track the proceeds of bribery and corruption and to enforce the law. Next new indicator is KFSI number 9 on corporate tax disclosure. And here we also have two different components. The first one is on secondary mechanism of country-by-country reporting. And here we measure whether the jurisdiction requires the filing of a global country-by-country reporting file by domestic multinationals and by foreign multinationals with domestic operations. The second component is tax rulings and advanced pricing agreements. We assess here whether all unilateral cross-border tax rulings published online for free, anonymized or not. We do give a minimal credit if only some rulings are published against cost or if comprehensive statistics are published about all cross-border tax rulings. It is important to differentiate, though, unilateral cross-border tax rulings from bilateral or multilateral ones, where the latter, I mentioned, involved an agreement by all tax administrations for all jurisdiction for which the agreement is sought. Unilateral cross-border tax rulings are unilateral and therefore do not require prior agreement. Now, because this represents the highest risk for abusive tax policies, we are focusing only on unilateral cross-border tax ruling for this indicator. Next new indicator is KFSI number 10 on legal entity identifier, which we call in short LEI. This indicator assesses three questions. First one, are annually updated LIEs mandatory by law or regulation for all companies? Now, we assume that this element, most likely that no country will receive any credit at this stage. The second is there a legal requirement for financial institution to use annually updated LIEs for complying with CRS reporting obligations, which in CRS commentaries is only an option for jurisdiction to choose when implemented. The third one is, given that LEI is now required for over-the-counter trading of derivatives, we think it is important to assess whether any financial market operators beyond over-the-counter derivatives is required by law to have or to use an annually updated LEIs. We include this indicator because, in our view, having a global system established for unique identifiers for legal entities is an important step towards curbing financial secrecy and enhancing regulatory capacity. Next one, we have 3 to go. New KFSI number 12 on consistent tax residency. The indicator assesses whether countries only allow for 183 days residency test for natural persons, or whether tax residency is available against investments or payment. In the latter case, we don't provide any credit. Now, this indicator is intended to address the issue of fake residency. As you know, the selling of citizenship or residency certificate to a person without requiring her or him to reside in the jurisdiction may provide escape routes to criminals who wish to launder money or hide their money in tax havens. Acquiring residence certificates may be misused, for example, by tax dodgers who would not like their account details to be automatically exchanged with the jurisdiction they actually reside in as part of the CRS. So by acquiring a residence certificate in exchange for investment from a jurisdiction that is not considered a participating jurisdiction according to the CRS, tax dodgers may prevent their information being collected and exchanged with the jurisdiction they wish to hide their money from. Next new indicator is indicator number 14 on tax court secrecy. This indicator assesses, first, whether a jurisdiction provides public access to all court proceedings of both criminal and civil tax matters, despite invoking of tax confidentiality provisions, and whether the written judgments of both criminal and civil tax court cases are published online for free, or at least against a cost of up to $10, euro, or pounds. And why this is important, in our view, open courts allow not only the scrutiny of judicial decisions, but are a prerequisite of the accountability of governments. They are essential to ensure compliance not only with the letter of the law, but also with its spirit. Preventing the public from scrutinizing tax court judgments may result in important decisions being made at court, which have an impact on the public's revenue, even without its knowledge. Last new KFSI number 16 on public statistics. This indicator assesses whether the jurisdiction publishes in a timely fashion online for free relevant financial statistics, or at least report them to the relevant international organizations. Now, when we refer to statistics, I can give you an examples like the bilateral trade in goods, bilateral trade in services, the BIS, locational banking statistics, the CRS aggregates according to the template TGN has published, and CBCR aggregates. Now we take the view that this aggregated data is essential to match financial evidence with the country's international commitments and to increase its compliance. So this is all the new key indicators we introduced, and now we have made also a decision about the way we present the FSI data. Following the results of the FSI survey, these are the changes we've decided on. So the first one is that the FSI value will be displayed in percentages on a 0-10 scale rather than decimal numbers as it was before. This is in order to make it easier to use and to present by the users. Second change is that we will provide an option to filter the ranking table results as preferred by the user, either by the secrecy score, the global scale weight, and the FSI value. This is in order to emphasize the secrecy score as a separate component to the FSI value. The third change is that we will provide more graphics, hopefully also maps, to the website in order to visualize the data better. And finally, we're going to make changes to the database reports. So the questions which are part of the secrecy score, those that comprise all the 20 KFSIs, they will be marked with an asterisk to create a closer link between the database and the ranking. We will provide an option to download the questions in Excel format, so you can play with the data. And finally, we removed some questions in order to decrease the length of the database reports. Now, with regard to the combination of secrecy score and the global scale weight. As you know, the FSI ranks jurisdictions according to their secrecy and the scale of their offshore financial activities. So it has, just to remind you, it has a qualitative component which is how much opacity each of the jurisdiction offers to non-residents, and a quantitative component, which is the market share of the financial services that the jurisdiction offers to non-residents. And the weighting of these two components according to the specific formula leads to the FSI value of the jurisdiction. Now, the FSI ranking is based on the FSI value of the jurisdiction. So the above formula that you see is the way the global scale weight is calculated for each of the jurisdiction. And once it is combined with the secrecy score, as you see in the formula below, it creates a ranking of the jurisdiction contribution to financial secrecy. So in terms of expected changes of the formula, the Joint Research Center statistics review, I mentioned it earlier, it is still ongoing, which means that we are looking for the best way to combine the data. And I think the Research Center seems to be excited to work with us as we are with them. And so the changes on the final formula will be decided very likely only after we have the final secrecy score and the global scale weight data ready. So I estimate that probably around July 2017 we will know about any change that we are going to implement. And finally, in terms of expected date of launch, the original plan was to launch it in November 2017, as we do every 2 years. But given we have to implement a new methodology for 112 countries, we're not sure yet that we will be able to complete the index and to launch it in November 2017. So we are now pondering to postpone the launch either to December 2017 or even to January 2018. Hopefully, we're going to have a decision by the end of this month, February. And of course, we are going to keep you posted and provide you with any updates that we'll have. So this is the end of the presentation. If anyone has a question, please click on the hand icon so I can unmute you and you can ask. And as I mentioned earlier, I would like to circulate to you 2 polls. The first one will ask you if you would like to take part in the FSI launch in your country. And the second, if you would like to write the narrative report for your country in case it has not been written already. And for those who will answer the second question affirmatively, I will send you a few examples of other reports we've written. It is supposed to be between 2 or 7 pages, and the deadline is around August 2017. So if you have any questions, please click on the hand icon. I don't see any hands. Okay. So we're probably gonna have this webinar. It is recorded, and we're probably gonna put it on our website and to blog it, and probably to maybe also on Twitter. So you're welcome to review it and the methodology. And of course, we're here for any questions you have. You have my email. You're very welcome to write us. I will now circulate the polls I've mentioned. Okay, circulated one. And soon I will circulate the other one. Okay, if anyone didn't receive one of the polls or some technical issues arise, then please write me in the chat or click on the hand icon. And thank you very much for joining. We're going to have now a monthly call. I have circulated a table with the expected dates. Some of them will be in the form of a webinar, and some will be in the form of just a conference call, which you're going to have a number to dial. And there will be an agenda for each call. Sometimes it's more specified, and sometimes it's more general, but you can choose which one you would like to pick up. So thank you, everyone, and I wish you a very good day, and see you next time. Bye-bye.